Home builders across America are resorting to slashing prices once again due to the lackluster buyer demand for buying new and existing homes for that matter. And this is leading to a situation where builder confidence is continuing to slip. Builder confidence for newly built single-family homes was 32 in June, which was down 2 points from May, according to the National Association of Home Builders. And this index has only posted a lower reading twice since 2012, once in December of 2022 when it hit 31, and in April of 2020 at the start of the pandemic when it plunged more than 40 points to 30. So, okay, during the pandemic, it was 30. Right now, home builder confidence is 32. Not too great. And keep in mind, the home builders are the ones who are doing well right now when it comes to selling homes, not home sellers on the existing market. Home builders are the ones that are having the most success selling their homes to would-be buyers due to the fact that they're so flexible with prices, and they're flexible with mortgage rate buy downs, they're flexible with the amount of options and different incentives that they give buyers to purchase their homes, all things that existing home sellers don't typically compete with. So more and more home builders now are moving towards slashing prices yet again in order to get their product sold. According to the recent data, it was revealed that 37% of builders reported cutting prices in June, which is the highest percentage since the National Association of Home Builders has been keeping track. Think about that. More home builders are cutting prices now than ever before, even during the last housing crash. Tell me that's not significant. One thing I keep telling people on my channel is if you want to know the direction of the housing market, just watch what the home builders are doing. And what they're doing is they are slashing prices at record rates right now. And this is exactly what regular home sellers need to do if they want to have any shot at getting their home sold. People say it's not as pretty here. Look how beautiful this garden is. Very beautiful. It's all about the neighborhood, guys. Different neighborhoods, different look, just like in Florida. And you can see that the number of home builders cutting prices is steadily on the rise, because just a couple months ago in April, it was only 29% of builders cutting prices. Then in May, it moved up to 34% cutting prices, and now in June is up to 37% cutting prices. Right now, the average price reduction is 5% in June, which is the same that it has been every month since last November. And also, 62% of home builders are reporting using sales incentives in order to get their home sold, which is up 1 percentage point from May. So you can see things keep moving more and more in the direction of favoring buyers right now in every single way. And some people might say, well, I'm not interested in buying a brand new home, Michael. They build these houses like crap. I see nothing but problems with brand new houses, and that's a fair point. But you have to understand that as home builders cut prices, this is going to force other home sellers on the existing market to cut prices as well. They will have no choice because they are in direct competition with each other, at least in areas where the home builders are building. It's not like if you have a bunch of home builders building in the state of Texas, that's somehow going to affect prices in New York. No, that's not what I'm saying. But in the local vicinity where the home builders are building, they put a tremendous downward pressure on existing home sellers in those neighborhoods. Right now we have a situation where inventory levels across existing and new homes is on the rise. At the same time, home buyers are on the sidelines waiting for affordability to improve, and it's resulting in weak price growth, in fact, negative price growth in most markets, and it's generating price declines for resales in a growing number of markets. It's not just Florida anymore. Even the chief economist with the National Home Builders Association agrees with that statement, because that's a quote from him. This house is just gorgeous. You can smell the flowers from here, let me tell you. Now, the National Association of Home Builders has been conducting a survey of home builders for the past 35 years or more, and they asked them different things about their perception on home sales, their sales expectations for the next 6 months, things like that, to try to gauge where things are going with the market. All three of the leading indicators that they asked home builders are showing a decline right now. As far as the current sales index, that index fell 2 points in June to a level of 35. The component that measures sales expectations in the next 6 months dropped 2 points lower to 40, while the gauge that is expecting traffic of prospective home buyers posted a 2-point decline to 21, which is the lowest reading since November of 2023. And they don't consider any of these numbers good until it's 50 or higher, guys. So all these indexes are 35, 40, and 21. That's how home builders are feeling about the state of the market right now. And don't forget, home builders build and sell homes for a living. That's their sole job as a corporation, is to build these homes. And this is what they're saying about the market. But what's funny is at the same time, when you look at some of the headlines from mainstream media, they're still trying to push a narrative that buyer demand is somehow picking up right now. This is what they're saying. They're saying things like, well, the spring market hasn't been that good, but the latest mortgage application data is showing some positive encouragement. And that's from Lawrence Yun at the National Association of Realtors. He's looking at this. For the week ending June 6th, mortgage applications were up 20% compared to the same week a year ago, according to the Mortgage Bankers Association. And this uptick comes even as mortgage rates have held basically steady. They haven't been coming down. This is what they're saying. Despite ongoing uncertainty surrounding the economy, home buyers seem to be taking advantage of loosening housing inventory in certain markets. Well, that part makes sense. However, the reality is, that's so cool. Lots of dogs there. Check that out. That's for you, Lizzie. I don't know how many he had there, like 7, 8 dogs walking. I actually saw that guy before. Last time I made a video over here. He's out here all the time walking those dogs. But think about what I just said here. This is a direct contradiction against what the home builders are saying. The home builders are saying traffic expectations are down. They say sales expectations are down. They're cutting prices by an average of 5% right now. 37% of home builders are doing this in order to get their inventory sold. Yet they're saying that buyers are starting to come back into the market. But don't forget, this is the time of year when buyers come back into the market, regardless of what's going on. When we had the housing downturn, when home prices were falling between 2008 and 2012, during that time frame, in the spring and summer months, home prices and home sales actually tended to go up a little bit. You still saw demand come back even when we were in the middle of a recession and we had far more inventory than we have right now. And speaking of inventory, they think the reason that home buyers are rushing back into the market, so they say, is because inventory is up 20% year over year. But those additional listings are not translating into more closed sales. The worst part is they're still trying to tell people that, well, the only bottleneck here, the only problem of why things aren't moving is mortgage rates. It literally says that right here. It says, mortgage rates remain the critical factor. Lawrence Yun says he's closely watching inflation data and the Federal Reserve's next move on its short-term benchmark. And if mortgage rates dip even down to around 6.5%, he believes it could trigger a meaningful turnaround, boosting sales activity by as much as 10%. So is anybody going to be rushing back out there to buy if mortgage rates drop to 6.5%? I mean, they're at like 6.85% right now. If you have the best credit, that's who's getting 6.85%. We're talking a very minute drop in mortgage rates, something that might only make, a $20 or $30, $50 a month difference on the price you're going to pay for the house. I know that that is a lie because I have even surveyed you guys here before on the channel, and in order for most people to go back out and buy right now, we're just talking about mortgage rates. Mortgage rates would need to fall probably at least into the low 5s, if not even the mid 4s, to get most people even thinking about moving off the sidelines, because now you're starting to move the needle more in terms of monthly payment. You're going to start slashing a couple $100s a month off your monthly mortgage payment if they drop that much. And this is the reason why most people are resorting to renting. In fact, there has been a huge surge actually in people choosing to rent versus buy between 2018 and 2023, even before the pandemic. And a lot of these renters are choosing to rent in the suburbs because they're like, well, if I can't afford to buy a house in the suburbs, and this neighborhood I'm walking through right here is like kind of a perfect example of that, then I might as well rent something there, especially if it's significantly cheaper. So between 2018 and 2023, the amount of renters surged by at least 5 percentage points in 11 out of the 20 suburbs surrounding the largest U.S. metro areas, according to a recent analysis by Point2 Homes. They are a rental market research company. And during that same time frame, 15 suburbs went from being predominantly composed of homeowners to majority renter communities. So we're talking a 5-year stretch was enough to turn neighborhoods that used to be predominantly homeowners into predominantly renters. That is a massive shift in what people are doing in terms of housing right now. This trend was most notably observed in areas like Dallas, Texas, Houston, Texas, and Miami, Florida, as well as northeastern cities like Boston, Massachusetts, and Philadelphia, Pennsylvania. In fact, in 5 of these top 20 metro areas, which are Dallas, Minneapolis, Boston, Tampa, and Baltimore, these suburbs are actually getting more renters faster than the urban centers they surround. So it's like more people are actually choosing these suburbs as home than actually living in the cities that they are surrounding. The amount of renters in the Dallas suburbs went up 17.6% between 2018 and 2023. And in the city of Dallas itself, the amount of renters only went up 7.9% in the same time frame. Now, a lot of renters are doing this out of necessity because they can't actually afford to buy these houses. They talked to one renter and he said, you know, you have your own land, you have your kids, you have a dog, and you want the outdoor space that a single family home provides, even if you can't afford to buy one. They talked to another renter who lived in the Chicago suburbs. He says it would cost him about 30% more on his monthly payments to buy a similar house in the neighborhood than what he's paying for rent right now. And he's even considering leaving the area in order to purchase a house somewhere else. And you know, one thing that they don't bring up here in this story is how many of these people are actually choosing to rent because of how much cheaper it is. Like this guy just said himself, it's 30% cheaper to be a renter than it is to be a homeowner. Well, maybe he's renting because he can't afford to buy there, but how many people are actually choosing to rent even though they could afford to buy? Because a 30% savings is significant. And right now in many areas across the country, it is at least 50% cheaper to be a renter than it is to be a homeowner. So that's kind of a no-brainer in terms of, you know, just monthly finances. If you're only looking at it from the point of view of how much money is left in my bank account each month, being a renter right now is pretty much a no-brainer almost everywhere. Just like I went over in my video talking about how is being a homeowner actually a forced savings account. And it can be for people that have no financial responsibility and are not saving money on their own. It can be for people like that. But for people who actually have the income to buy but choose to rent, they can easily take the difference and invest it into other investments and make a much more sizable return and get further ahead financially than just buying the house. And there's a lot of people who are choosing to do that as well. I just did a report on that last week about all the rise of the millionaire renters. Now in this story, they talked to another guy who is a renter in Lake Villa, Illinois. I don't know this place, but it's not too far away from where I grew up over there. And he says he would love to buy the property that his family is renting in right now. And it was even offered to him for sale at $340,000. And he says he wishes they could make it his forever home, but that is just far beyond their price point. If they would offer it to him at something like 200 grand, he would be jumping on it right now. But he says the $340,000 price point is crazy. But he didn't say, I can't afford it. He just said that the price is crazy, meaning that maybe the value isn't there. That's how I interpret that quote. He doesn't say, I can't afford $340,000. He's saying it's not worth $340,000. But if it was $200,000, it would be worth it without even hesitating. And I think that's the perfect example of the mentality of somebody who's choosing to rent right now instead of buy. And you know, there's a lot of benefits to being a renter, which I'm not going to go over right now in this video, but there is something to be said about just having one payment. You know, like for example, I'm a renter right now here in California, the place that I rented. You know, I don't own the place I'm in here. And like the second day we were here, we had some things that needed to come over and they addressed, like the maintenance crew came over, fixed everything we needed to be fixed within the first 48 hours we were even here. I only have to make one monthly payment, which is my rent. That covers basically everything. I just have to pay the power bill and my own internet bill. But you know, when you're an owner, you have all these separate expenses, your HOA fees, you have taxes, insurance, repair bills, all different kinds of things that come up on top of all your utilities. And there is something to be said about the simplicity of being a renter. And if for whatever reason I don't like it, I can just leave. Having been on both sides of the coin now several times, I really do feel like there are some major advantages and disadvantages to both sides of it. The other thing is, going back to home builders, is a lot of home builders are starting to listen to what buyers want, which are smaller homes and more affordable homes. I've seen a lot of people in the comments say exactly that's what they want, and more home builders are starting to listen to that. And more first-time home buyers, for example, are looking for those smaller and more affordable homes, even if it means they're brand new homes. In fact, in the first quarter of 2025, the average size of single-family homes has declined. It had declined year over year in each quarter since 2022, and at the same time, home buyers are willing to give up some features of the home to also make it more affordable, which really just comes down to building a smaller and simpler house that has less bells and whistles and less amenities. Kind of like buying the base model of a car rather than buying the higher end model that comes with all of the bells and whistles. And it can save you a significant amount of money, but they both serve the same purpose. The car gets you to work, the car gets you from point A to point B. The house is still a place to live, even if it doesn't have all the fancy stuff. In fact, according to John Burns Research and Consulting, a survey they did in December of 2024, about 25% of 1,200 homeowners and renters say that they would purchase a home between 1,250 and 1,750 square feet. And why not? If you look at the average size of an apartment, that's pretty much smaller than most apartments that people are probably renting right now. So that's still an upgrade in terms of space, and you're getting a yard to go with it. Realtor.com found out that in March of this year, the median square footage for newly constructed homes on the market nationally was a little over 2,000 square feet, which is down from the 2,130 square feet it was in March of 2020. So home builders still have some ways to go in terms of building smaller homes, which you would think would be a very easy adaptation for them to make, because they buy these huge plots of land, and then they would actually be able to build more homes on that same amount of land by just building smaller houses, and sell more houses and make more money. So you would think that they would just be jumping on this faster than they have been. Now here's a story that affects us big time in Florida, which is that President Donald Trump says that his team is going to move forward with winding down much of the Federal Emergency Management Agency, but not until after the 2025 hurricane season is finished, because it's showing that things might be bad this year. Well, guess what? It shows that things might be bad every year. And in case you don't know what I'm talking about, that means that they're looking at getting rid of FEMA. They want to get rid of it completely, basically gut the program. You know, in some ways, based on what happened last year, I almost feel like it doesn't even matter. You know, FEMA was in hot water last year after the hurricanes and after the situation that happened up in Asheville, North Carolina. And I remember reporting on this while I was here in California, that FEMA actually ran out of money the very first month of its fiscal budget, which was October of 2024. They were already officially out of money just from the natural disasters that happened then. So if FEMA's running out of money that quickly, they might be kind of useless anyhow. But the Trump administration's looking at eliminating FEMA after the hurricane season this year, and what they're looking to do is empower governors to go out and respond to emergency situations. And they said that this move would make sure that taxpayers are only fulfilling the need to which is appropriate, and that people are responsible to respond to their own people closest to home. So basically, everyone takes care of their own, no more national subsidizing of natural disasters. Now, on the one hand, I think that's probably a pretty good idea, and I wish everything would work like that. But just like a lot of the other things that the Trump administration has said that they're going to do so far, this might not actually materialize into reality. It's just another thing that they're talking about doing. But if it does happen, it can have some major ramifications of how we're going to be affected in Florida, because we are, after all, ground zero for getting hit with hurricanes year after year. In fact, no other state gets hit with more hurricanes than Florida does. So how this would change things is if a certain state were to get hit by a hurricane, That's what the governor is going to have to handle now from now on. That's what Trump says. And he says, frankly, if they can't handle the aftermath, then maybe they shouldn't be governor. That's what Trump says about this. So I don't know. Let me know what you guys think about that. You're happy with FEMA being completely gutted and going away, especially if you're a Florida resident? Let me know. Because, you know, a lot of times I hear people say, especially that don't have insurance or live in areas that get hit with these disasters, say, oh, I'm not worried about it. FEMA's going to come in and they're going to help us. They're going to help us rebuild, you know? But what if there is no more FEMA? What is your backup plan then, especially if you have no insurance? But FEMA has already actually lost 200 people that got fired, and they were offered voluntary exit programs in the last 4 months. FEMA has also been scaling back its financial support to state governments, and they've been shutting down billion-dollar grant initiative funds to projects that are meant to curb future disaster damage, and they're attempting to freeze more than $2.2 billion in other grants. Personally, I feel like there's just too many safety nets for everything, guys. People can file bankruptcy whenever they get into financial trouble, and they can still, you know, keep some of their assets. People can walk away from paying bills and have almost no responsibility for that. And then there's organizations like FEMA, for example, that come in and to the rescue with taxpayer money from areas that continue to get damaged basically year after year. Is this really the way we should be running things? I don't know. But I know a lot of people have to pay for just a few people's problems, so I'm sure a lot of people aren't happy with that either. I've heard many people discuss in the comments how they wish it was like that, where every area is responsible for its own problems, its own natural disasters, etc. But whether any of this is going to happen is yet to be seen. So if you guys enjoyed this video, make sure you are subscribed to the channel. And if you don't want to wait for my next video to come out, check out this one on the screen right over here, and I'll see you in the next one.